Okay. So we have a question from Grant, and Grant is asking, so are you saying that you can still make a profit when it drops? That is correct. So you can, there's still an opportunity for you to make a profit. So let me show you what I'm talking about here. Let me show you what I'm talking about here. Okay. All right, so here we have a pair, right? And let's say, let's see if I can find a good example. Let's see. Let's see if I can find a very good, because that's a very good question you asked. All right, cool. All right, so Grant, to answer your question, just because the market doesn't initially go in your favor from the get-go, doesn't mean that you're done, that you lost money, because the market can correct itself in your favor. And what we call that drawdown. We call that drawdown. So when you're in the negatives, which may happen, I mean, you're always, every time you start a trade, you're always going to be in the negatives, because there's what we call a spread. And I'll talk about that later on. But the spread is pretty much, way the broker, kind of charges you for a trade. But if you're in the right, most of the time, I mean, it's pretty much a free trade. There's no type of commission like as you will face when you're dealing with stocks. Every time you want to trade a stock, you do have to pay a commission, and that could be costly over the long run. So with Forex, you don't have to worry about the commission. That's the difference. But so let's say, Grant, let's say that, you know, I'm predicting the market to go up from here. So the market starts going up, it starts going up, it starts going up, and right at this point in time, I say the market is going to continue to go up, right? And let me just put a marker here. Let me put a little line right here, because this is the price where you said that you made your order at. This price here at 76.80 is where you made that order, and you're predicting the market to go up, pretty much saying that you made a buy. So the market continues, and oops, it doesn't go up. It actually goes down, right? But because of strong analysis, you're still sticking to your guts. And right now you're in what they call drawdown. You're in the negatives right now. You're losing money. The further this market goes, the more money you lose. But you're very convinced that this market is going to go up because of strong indicators and because of really good analysis as well. So, you stay in the trade, you don't close out the trade and take your loss. You stay in the trade, and the market starts to go back up. It starts going back up. So you started your trade right here. This is the market where you first made your entry. You took some drawdown, but look at how the market is starting to come back to where you entered. And so it starts to come right back, and bam, it passes up where you enter that, and it goes up. But it doesn't do that, bro. In this example, it doesn't do that completely, but you can see how the market can come back to where you made your order. And so it dropped, and then it came back to where you made your order. And at this point in time where you made your order, the time the market hits where you just made your order is where you're at 0-0. You know what I'm saying? You're at break even. And let's say that the market was just to continue to go upwards. Let's say, oh, whoa, what the? All right, cool. Let's say the market was just to shoot like sky high. Let's say it just went all the way up. Then now you'll be in profit. You will now be in profit. So what I'm trying to say is, just because, you make a trade from the get-go, and you might take some drawdowns from the very beginning, but rest assured that you'll rise back. I mean, if your analysis is strong enough, if you hang in there, the market can come back in your favor, and you can also make money as well. So that's pretty much how that question can be asked. So Yeah, you're right. You're right. You're right. You're right, Grant. So you pretty much and patience, that word you just mentioned, patience is such a big thing. You cannot panic. Okay, you gotta picture yourself like a marine or like a seals person. In the middle of the desert, it's hot, but they're tuning out all that nonsense. They're tuning out the heat. They're tuning out that you probably got ants up their legs, or they're thirsty, and they're just waiting for their target to come out. So you got to be calm. You got to be really calm with these markets. It's kind of like the wave. Like if any of you guys ever went surfing, you gotta know when to get in and when to get out, and that's really what makes a good trader. A good trader is patience. That's what separates a uh, a long time lifetime trader from a novice trader, from someone who just began. It's just patience. You gotta one trust your strategy, and then two, you gotta just be able to have patience, because sometimes the market is wild. Sometimes it'll go up, sometimes it'll go down unexpectedly. And you just gotta learn how to catch those waves, ride those waves, and that's my job, to teach you guys when to get in and when to get out. It's kind of like surfing a wave. You see those waves coming. All right, you get in, surf that wave. All right, the waves settling down. All right, let's get out. You know what I'm saying? So you gotta know when to get in and when to get out. So there's two things that really makes a great trader. Okay, one is patience. The second thing is knowing when to get out of the trade. Those two, I'm telling you, you guys master that. I mean, I'll see you guys in Las Vegas every other day. No, I'm just playing. I don't know what goals you guys have, but that's pretty much the gist of it. So, did that answer your question, Grant? Everything? Any other questions anybody have? Awesome, awesome, cool, cool. So we're gonna continue to move on. So that's fundamental analysis. Fundamental analysis is pretty much just watching the news, word of mouth, what you see, hearing from friends. Like let's say Donald Trump, you watch CNN and Donald Trump says something about the U.S. You know, he talks badly about the U.S. Then that dollar's gonna drop. The dollar's gonna drop, and you can sell the dollar because you know it's gonna drop. You can sell any pair that has the dollar as the base, because you know that pair is gonna drop. Um, and another, you guys, I recommend you guys download this app called My FX Book. It's right here. Um, you guys should definitely download this. So what this does, it shows you all the news that is occurring within a particular week, and it tells you the day that news is occurring, and also the specific time that news is occurring as well. So this is something I highly recommend you guys do, is download that app, because that app will tell you, and give you an idea of when the market is going to drop and when the market is going to rise. And it's really good for if you are a short-term trader, if you don't like to be in swing trades and stuff. You know, if you only like to be in the market for a certain amount of time, other than a couple of days, or actually a couple of weeks, couple of months, then I definitely recommend you guys write this down. It's called My FX Book, and it's just an app that tells you news on different pairs, and that's crucial. It can tell you, when the pair is going up and when the pair is going down, depending on the strength of that news and how big of an impact that news can have. So that's a very good app to have. Next, I'm gonna talk to you guys about technical analysis. Okay, so what technical analysis is pretty much using it's pretty much when you gather information based on mathematical algorithms from tools that you have on your trading platform. So, for example, moving averages, Fibonacci levels, the harmonic scanner, etc. So when you are wanting to determine whether a pair is going to go up or down, there's different ways you can do so. You can use tools that platform provide for you to kind of get an idea of where the market is going. So for example, this is called a Fibonacci extension. you know This is called a Fibonacci extension. And what it pretty much does is, the market drops, and if it comes up again to one of these key levels, you can expect it to bounce back down. That's one mathematical tool. You have something called, harmonics, where you can draw patterns to kind of, give you an idea of where the market's going to go. So there's a lot of different like tools that you can use to determine where the market is going. You feel me? So it all just depends on what you prefer. I mean, there's something called EMAs too. So let me show you guys what EMAs are. They just show you like the strength of pretty much overall strength of where the market is going. I don't have EMAs. Well, they have something called pivots. So pivots just tells you like, strong price levels and whatnot. Wow, I thought I had EMAs on here. Well, we'll eventually get to EMAs, which I think isn't a bad way to measure the market. I usually use EMAs as like the last resort. Like, I'll look at a chart, and if the EMAs correspond to that, then that'll just be confirmation for me. But so yeah, you guys get the point. Um, that's pretty much how EMAs. I mean, how technical analysis works. It's pretty much just using mathematical algorithms. Um, it's pretty much just using mathematical algorithms to determine whether the market is going to go up or it's going to go down. So let me show you guys. So I just showed you guys that on the TradingView platform. Now let me also show you on. Let me show you the same thing on the MetaTrader 4 platform. So also a thing about the broker that I also forgot to touch upon is that a broker is really so when you're using the platform is what allows you to see the market. You know what I'm saying? It allows you to view the market, and when you're viewing the market, you can't really make any trades because you don't have a broker. And so what the broker does, it lets you react to the market. It lets you make money from the market. So without the broker, you can't do much. You know what I'm saying? Just like a body, without the brain, you can't really move or nothing like that. You can only just, analyze really. But when you have a brain in there, you can do more things. You can set trades and stuff. So that's pretty much what a broker does. It allows you to make trades on certain pairs and then go from there. So here is the MetaTrader 4 platform, and as you guys see, here are the tools that you can use to do technical analysis. You have the Fibonacci extension, as I mentioned earlier. I mean, you can draw trend lines to kind of get a feel of where the market's going. There's some other tools as well. Let's see. This is pretty much. This is kind of crazy, guys. Don't get a little sick looking at this, but we'll go over this as well, just a little bit about it. But here's another way you can view the market. I mean, as you can see, here's all kinds of pivot points. Here are EMAs, as I was talking to before. And these tools are just used to kind of help you gauge where the market is going. And they call that technical analysis. It's just using mathematical algorithms to determine where the market's going to go. Do we have any questions so far? Everybody solid? Awesome, awesome. All right, so that's pretty much it, guys. That's everything that that's pertaining to our class today. We got a lot to hammer though. We got some stuff to talk about for sure. It's just the beginning, so we're just starting off, guys, and I'm pretty excited to get this going. On Friday, we'll cover a little bit of the basics as well, and then next Monday, and next Wednesday. All right, you guys kind of get ready for real, because it's about time to start rocking in these markets and making some trades and learning how to make trades as well. Learning, when to get out of a trade, when to get into a trade, and go from there. So pretty much, I'm pretty much done for the day. I'm very excited to Yep, I can't wait either, Graham. I'm telling you, man. You guys, I like the mindset you guys already have from the get-go. You guys seem to be on it from, I mean, from the books you guys are buying. I mean, I'm impressed. Now, I'm not sure what really happened to my music. I'm kind of upset about that. I like to set the tone, but as I mentioned before, I'll get everything straightened out for sure. Sean Mendez, that's my boy, man. Just letting y'all know. But yeah. Any questions though? Does anybody have any questions? Okay, so Grant says he has a question. What's your question, Grant? Okay. Okay, so the next class we're gonna talk more about psychology. Okay, we're gonna talk about psychology. We're gonna touch upon like most of the stuff we talked about today in more detail. Um, like how to set a trade, like buys, sells, stop losses. We're gonna talk about we're gonna talk about sell limits, buy limits, and then we're also going to cover psychology because I can teach you. Yeah, you're right. You're right, Daphne. Trading psychology is a major key. I can teach you how to trade in a week or two. But the thing that separates most people is really the psychological aspect of trading. Being able to eat good food because the food you put in is able to fuel your brain in a certain way to let you perform on these charts. Also, being able to rest up. You don't want to be tired looking at these charts because when you're tired, you start to see things, you become delusional, you don't think straight. And so the psychological part of it is just like if you want to work out. When you work out, you make sure you have the proper sleep, the proper things in your body, the proper amount of fluids. And it's the same thing when you're trading. When you trade, you want to make sure that your mind is up to par. That way, you know, um, that way you're able to make the best decisions. So I'm not gonna lie to you guys. This stuff is, I mean, it's not hard to learn. I promise you, I can teach you guys this in a week or two. The hardest part is gonna be the psychological aspect of it, being able to make the right judgments, and you guys will learn how much, uh, you know, how much the market can play with your mind. And so I'm gonna start throwing out some books on the trading app about books to read about about the psychological aspect of trading because I'm not gonna lie, okay, this is like what separates patience. Obviously that deals with the psychological aspect of things, and that those psychological books are really gonna help you you know understand where your mind is at physically or mentally and allow you to make good trade decisions and profit in the market. So you know that's pretty much what we're going to go over next class. Does anybody have any other questions though? All right. Awesome, awesome. Anytime, guys. I'm just trying to open your guys' eyes and help you guys evaluate, these markets and to see, how this stuff works, and also understand that you can also apply this type of strategy to stocks as well. And so what I'm teaching you here is also things that you can apply to stocks as well. So if you want to trade stocks, I'll give you the necessary tools and necessary knowledge to actually apply some of these things to stocks and stuff. So, do understand that as well. But I'm glad I was able to help you guys in understanding, how this stuff works. This is only the first class, so we got some things to cover for sure. I try to keep these things around an hour. We went around what, an hour and 20 minutes, but that's mainly because of the technical issues that we were having. So pretty excited to get this going. I'll actually download this and get you guys' emails, and we'll go from there. So if anybody wants to contact me, I'm always in the group chat, so just hit me up. Other than that, if nobody has any questions, I'll just go ahead and end it, and go from there. So you guys have a good one, have a blessed one, and keep training. And I'll see you guys next time. Have a good one, guys. You too, Grant. You too. Have a good one.